So, you guys remember the dude from The Big Short, Michael Burry? He's betting that the U.S. market is going to crash and massively with a 1.6 billion dollar position against the S&P 500 and Nasdaq. Okay, so for those of you who aren't familiar with this guy, I'll give you the simple version of his story only because I've seen the movie and that's about the extent to which I know. But back in 2008, they had these things called mortgage-backed securities. Basically, they said we're going to bundle up all these mortgages, put it into a security that you can invest in. And the general idea was, at the time, if you take a decent amount of good mortgages and then take the bad ones, jam them in, it goes from a AAA to like a B plus. Makes the crap look good. The long story short of it is that Michael Burry and his firm, well, he convinced them to short mortgages, and people thought he was crazy betting against the housing market. That's nuts. And then sure enough, the market crashed and they made something like, what is it, like, I don't know, 500, 800 million dollars or whatever in this massive, the Big Short, they call it. He's basically doing the same thing now, but a lot of people are saying he's bearish. He thinks everything's going to collapse. That's what he does. Right now, assuming this guy would be correct, and that's why everyone's paying attention, he's saying there's a major market collapse on the way. Or at the very least, he's not saying anything. He's putting his money where his mouth is and keeping his mouth shut. He's basically making a big, big bet that the S&P 500 and NASDAQ are going to tank. Now, I don't know what that means for you or your 401k, but here's the news. They say Burry held bearish positions against the S&P 500 NASDAQ 100 index, worth a combined $1.6 billion at the end of the second quarter, according to security filings released on Monday. The founder of Scion Asset Management bought put options against $739 million worth of shares in the popular Invesco QQQ Trust ETF during this quarter, and separate put options against $886 million worth of SPDR and S&P 500 ETF. Put options convey the right to sell shares at a fixed price in the future. They typically increase in value if the price of the underlying stock declines, making them a defensive bet. The dollar amounts of the positions refer to the value of the underlying securities, but the new filings do not reveal how much money Burry actually put on the line because they don't show the specific terms of the options he purchased. Interesting. Options contracts grant the holder the right to buy or sell a block of 100 shares of the security. Blah. Okay, look, I'm not a financial guy. Here's my general understanding. I say to you, hey, I'd like to borrow $5. I then, maybe I shouldn't use money as the analogy here. I say, hey, let me borrow your car. I then go and sell your car for $20,000. Then all of a sudden they announce some insane policy causing the value of cars to collapse. I then buy the car back for $10,000, pocketing $10,000. I give you your car back. That's how it works. They say, hey, we're going to do it. We're going to short the stock. I'm going to borrow 100 shares, sell them for $100, wait for the stock to collapse, buy them back for $10, give you back your shares. However, if the price increases, now I've got to buy back those shares for $200. That means $100 out of my pocket. That sucks. They're going to say Burry rose to fame with his bets against the U.S. housing market before the 2008 financial crisis. Michael Lewis's nonfiction book, The Big Short, was released in 2010, and the movie version came out in 2015. It's a good movie. It's a really fun movie, by the way. He also profited in the early 2000s by shorting high-flying tech stocks during the peak of the dot-com bubble. However, his bets have sometimes appeared to misfire. In late 2020, he initiated short positions against Tesla, but later said it was just a trade, and he'd exited the position after Tesla stock continued to soar, according to CNBC. It's not clear how Burry's recent options bets against NASDAQ and the S&P 500 have fared, given the regulatory filings do not show the terms of the contracts. I will say this. Tesla's stock was at like $300. Then Elon Musk buys Twitter, now X, and then people start attacking him in the media relentlessly. This, combined with a few other issues, Tesla stock drops to like $100. Me, not being dumb and a fan of Tesla, said it's probably a good idea to buy because there's no reason I can see for Tesla to just keep going down. Let's take a look at where Tesla is currently at. And I didn't put a lot of money in it to, just so you know. But I did decide, buy the dip. What's going on with Tesla? Tesla is currently at $227. So that means I'm seeing what's my return? 54%. Amazing. I don't do a lot of trading. I don't have that much in stock or anything like that, but just some. So they go on to say, so far this year, the S&P 500 is up roughly 17%, while the NASDAQ composite is up nearly 32%. Outsized gains in a handful of tech megacap companies such as Nvidia and Meta have fueled much of the year's rally. The question, I suppose, is how long is he planning for? Like, is he making this bet for? I do think with the upcoming election, political instability, I would not be surprised to see a bubble burst and the market take a hit. They're going to say that big tech stocks have been fueled by investor excitement and the potential applications of AI, as well as the prospects that the Federal Reserve will soon end its inflation-fighting rate hikes. Meanwhile, Burry's fund has also liquidated stakes in Chinese e-commerce companies JD.com and Alibaba, as well as regional banks. The fund also increased its holdings in stocks related to oil, gas, and media, and travel and tourism. Among its long positions, the fund more than doubled its stake in online luxury goods market Real Inc., which is up nearly 100% for the year to date. This guy's making money, huh? It also added new stakes in iHeartMedia, Carter Communications, and Warner Brothers Discovery, among others, the filing showed. The fund also added a huge new position in Expedia Group and a block of shares in MGM Resorts International worth $6.6 million. This one also got me thinking, too. I don't know what's going to happen in terms of the S&P 500, if there's going to be a major market collapse. No idea. What I can tell you is, I like to play poker. I like Texas Hold'em. And, I've been playing various forms of poker my whole life. Not as heavily and consistently as this year, though. But I used to play when I was younger with my friends. We'd play like 5-card draw and stuff like that. And then I mostly played Magic the Gathering. So I'm a big fan of card games and strategy and all that stuff. And recently in this past year, I've been spending a lot of my free time in various poker rooms, just having fun. Low stakes games for the most part. And one thing I found is, boy, are there a lot of casinos popping up all over the place, which in my opinion is bad news for the economy, bad news for our society and culture. I view casinos as very, very fun, but I view them as something that exists that pops up when there is no moral or cultural direction for a society. It's mindless entertainment, number games for no reason. A lot of people lose a lot of money there and it destroys their lives. A lot of people waste time there for no reason. And that's why, to be completely honest, a lot of the time that I would spend in casinos in the past several years is actually not that much. Maybe a couple times a month, we'd bring guests out to play some blackjack for fun, but we wouldn't spend a lot of time there. Texas Hold'em is a different game. It's a bit of a strategy game. It's a people game. I think they say 70 to 80% of hands won are not the best hands because there's more to it than that. And so that's why I've been spending a lot more time researching and looking at casinos. They tend to be the only place where you can actually play Texas Hold'em, card games, poker, etc. In different states, they have different rules and regulations, but what I found was interesting. So he's investing in MGM Resorts, travel. I don't know about travel, but I do think that, in my personal opinion, and not advice for anybody else, I would expect stock in casinos and entertainment groups to go up. Things like Penn Entertainment, Dave Portnoy was bullish on that. And the reason is social and cultural decay and a need for heavy distraction. There's a story out here with Charlestown Races, as they call Hollywood Casino at Charlestown Races. Apparently, it used to be the biggest poker room in the D.C. area. They had something like 56 poker tables, and it was just massive. Everybody wanted to play here. It was the only place you could play. Then they opened Maryland Live. Then they opened, I think Horseshoe came next. I could be wrong. And then MGM National Harbor. MGM National Harbor has a massive poker room of something like 50 some odd tables. It is always packed. And I'm told, it could be not true, that it's the highest grossing casino in the country. I'm not here to talk about casinos. I'm here to talk about the massive expansion of games of chance for money. People are broke, complaining about money. At the same time, these casinos are jam-packed with people who can make bets that blow my mind. This is why I think the system is collapsing. And I know it's a bit of a narrow view, but let me explain. I see these videos popping up all over the place of people saying they can't afford groceries. I then go and I'll go to MGM National Harbor. And mind you, full disclosure, and I mean this with, I'm not saying this to humble brag with a degree of humility. Obviously, I am well off. I have worked for a very, very long time. And since, 10 years ago, I've been, prior to 10 years ago, I was relatively poor and broke. And then I had a series of successes, which led me to being more and more well off. I'll put it that way. Most of the money that we make here at Timcast is reinvested in the company. But of the money that I pay myself, aside from making investments and planning for my future, I have a decent amount of money that I would describe as disposable. I do not like to gamble. I don't like playing lots of money at casinos. I go to MGM and my mind is blown when I see the amount of people playing table games with a $100 minimum bet. And I'm thinking to myself, how do you play that game? You sit down, these people have $1,000 in front of them, and they make a $100 bet and then lose, and they put $100. I'm like, it's crazy. That's MGM National Harbor. Who are these people? This is the question I've always had, that can afford to gamble thousands of dollars. I went to Vegas. We were in Vegas. We were flying back when I was going to the doctor. I saw a guy drop $40,000 on the craps table, lose it all in like 10 minutes. I had $100. I had $100 and I put down a green chip. It's $25 on the pass line. And that's what I did. When I play, sometimes I might take out $200 and, you play small increments where it's cheap. But I go to these casinos and it's insane to me. I'm sorry. It's absolutely insane to me. Something is deeply wrong in this economy when you have such, let's play a game. In this area, within 2 hours of driving, we've got Hollywood Casino, Maryland Live, Horseshoe, MGM, Harrisburg Hollywood, York Hollywood, Lady Luck, Rocky Gap, Delaware Races. That's 9 casinos, all within a couple hours driving of where we are. Now you want to add another half an hour to it? We got Pittsburgh. Whew. Pittsburgh, I think they have Pittsburgh Live. You want to do another hour? Now you're if you get into 3 hours, within 3 hours driving of this location, then you've got 2 casinos in Philly. We're looking at from where I am, in 1 hour, I can be at one of 5 different casinos, and Charlestown is 15 minutes away. This is not a good thing. I like arcades. I like games. I like going to Dave & Buster's. I like playing skee ball. I like winning prizes. I like games of skill. That's why I prefer poker over, say, blackjack. Blackjack can be fun, but I don't like those games where it's like you're like craps. You roll the dice. I'll play these games, but I look at all this stuff, and as much as I do enjoy playing, say, poker, which in the literal sense is gambling, but in the technical sense, it's widely considered to be an overt skill game. I look at all of this. I look at these stories, and I'm just thinking to myself, I don't know how this system survives when we are effectively becoming Sodom and Gomorrah. So maybe this all leads to a major market collapse, but far be it for me to predict the future. No idea. I'll leave it there. Next segment's coming up at 6 p.m. on this channel. Thanks for hanging out, and I'll see you all then.